sore neck, whiplash. Watching this market go up and down and all around, I think it's going to continue, folks. Can the Bulls make a stand today? We got a low. We're 60 handles off it, but you know how quickly that can evaporate. Tariff talk, wild close, CrowdStrike strikes out on earnings. We're going to talk home builders at 8:35 with Jay McCanless of Wedbush Securities, and little optimism there from Jay. So here we go, folks. It's Wacky Wednesday on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We're up 12 handles, 0150, but boy, we're bouncing around like a ping pong ball. The buck down again. They are trashing the dollar, down 77 cents, 104.93. TLT giving some back again, down 44 cents, 90.99. USO down marginally, 24 cents, 73.07. GLD and SLV both up modestly. Bitcoin having a nice move. That's up 4%, $3,520 on the futures at 90,850. And so I don't be accused of being S&P centric. The triple Qs are up 0.4%, buck 92, 497. IWM up 0.62 at 207.70. All right, guys, we got a wild day coming ahead of us. How you doing?
We're here. It's raining hard where I am right now, which makes it very interesting when there's 4 feet of snow on the ground. So in the great melt and trying not to get the houses all flooded here. That's where we're at right now. Christian, what's going on with you?
Good morning. I got rain here too. I think we're aligned somewhat geographically. There's a headline that's out this morning on Novo, which is offering Wegovy. They're trimming their price. They're trimming their price. Wegovy lowered cost at $4.99 a month. That is going up. NBO is going up, and Lilly is going down. So I come in hot with the headline for you.
Nice. We like the breaking headlines here, Christian. Novo moving, obviously trading actively over in Europe right now in this headline as well. Remember, it's an ADR, so it is open in that market over there. It's not pre-market for that stock. Lilly is selling off, to your point. Just slightly. We're down $6 here. So this headline just breaking there, I believe, just after 8 o'clock. So hot off the press here. I mean, Novo, it's been beat up. Lilly's been coming back, but Novo really hasn't. Is this, a headline to drive it back higher here? I don't know. Stocks in a downtrend now. We know stocks in downtrends have trouble in this market getting traction. So that would be, why I'd probably be more inclined to sell the rip.
For me, holding $90 here. Look at those 4 days of really quiet ranges. Yesterday it got hit, but like 4 days of tight ranges. Boy, right in there. Let's hold 90. We're up 350 in the pre-market. If you're looking for a nice target on the upside, if you could establish a solid 90 bid, let's go to our trusty data window. 93.80 if you're looking for more. Lilly was green, now red. And wow, this thing's really made a hell of a comeback here. I got a print up 640. Is that a bad print, Dennis? I saw
of course
it go down.
It is. The 8 o'clock prints. So it's down. It's down 2 at 909 offered right now. So we know how this works. Odd lots are going off at 907, so down 4. HIMS also trading lower here on this. Richard, thank you for that from the chat. HIMS is trading down about 3% here right now in this Novo headline as well. So again, knowing your relationships, company and competitor coming out cutting costs, not going to be good for the competitors, obviously. So HIMS, which is, obviously generic or trying to sell discount brands here, trading lower on this.
So Dennis and Christian, the last half hour there, a little bit of movement, huh?
Yeah, I mean, again, we're going to get Trump dumps. We're going to get Trump pumps. They seem to be happening not only on a daily basis, but now multiple times a day. So tariffs go in, stocks tank. Then we get rumors in the afternoon, Lutnick saying there could be a deal announced as soon as tomorrow. Market rallies on it, sells off again, now rallies a little bit on it again. I didn't hear anything like that from Trump in his speech last night. So even though Lutnick was talking, that there could be a deal and maybe talking up the markets a little bit here, Trump did not indicate that whatsoever in his speech. He acted like he was going to be tough. He looked like he was going to continue to be tough. He didn't give any hint of saying, yeah, we're close to a deal with Canada or Mexico here. So I don't put a lot of weight in that at this point in time, but we know deal or no deal is going to be the question. That's a great game show, by the way, but it's going to be the question here for the foreseeable future.
Just from a gut feel perspective, the market kind of is not buying, any of this stuff. I mean, I don't know. I mean, I'm seeing stuff in the YouTube chat right in the comments about Luck saying this and this afternoon. I don't know. I
He's
kind of
he's
feel
on right now on Bloomberg, so that's why we're getting more headlines. So it continues to be an evolving situation.
Yeah, I don't think Trump's going to do a deal one day after here. I honestly don't. I think Lutnick's talking and, maybe he's trying to give the market what, it wants to hear. And that's definitely what it wants to hear. Maybe there's going to be some meet in the middle thing where the tariffs are lower. But I don't think Trump, who has, said his favorite words in the world are love and country and, family and then tariffs, I don't think he's going to just back down here, folks. I think this is something he told us he was going to do before he got elected. He told us he was going to do it after he got elected. He's finally done it. You think he's getting rid of it after one day? I think that's wishful thinking. So I think we, again, need to not read between the lines, but actually read the lines that Trump was saying last night. He is serious about, domestic production. He is serious about breaking international trade to a certain extent here. So I think there's no way he's doing a full-on oh yeah, no tariffs, we're kicking it down, we're taking them back. I don't think that's happening today. I think it's wishful thinking by Lutnick. I think it's wishful thinking by the market. Lutnick's informed, but I'd be very surprised if there's a full-on retraction of tariffs here today.
I was just posting a couple other comments in here. I'll take the other side of that.
Please, that's why we have a market.
Yeah, exactly. That's why we have the market. I think most of this is he's using these tariffs to negotiate. I think there could, there'll be some, I think, tariffs, but he's using this as something, as a tactic to get something done. Now, you could argue whether or not he's going to get something done, but this came out yesterday too. To me, Lutnick is giving us some information that Trump is not, and he just said again, and he said this yesterday. I forget what time he spoke yesterday because it's tough to kind of get all the timing of this stuff done. But
sure.
He said this month it's about fentanyl with regards to tariffs. So my opinion is they want something. They're putting these tariffs in effect, and it's getting jaw-dropping reaction, and everybody's reporting, oh my God, and starting to calculate how much is this going to cost and so forth. And then you get some information about, hey, if they could do something about fentanyl, we'll dial back those tariffs. Now, I don't know what that is, and I don't know if that's even possible, but that's my take. And again, I could be wrong, but I'm just kind of trying to understand that when something is done, I think the last time they said that they were going to do something, he postponed them, right? And then, of course, the deadline came up, to your point, and they went through with them. So, I think they're supposed to speak, Mexico's supposed to speak tomorrow with Trump. So it's going to be interesting what happens this week. So,
and again, this is why we're whipsawing. It's those contra viewpoints that are going to keep oscillating us and chopping us, and we're headline driven. Lutnick bringing the market out of the dumpster. If all of a sudden Trump says, no, there's nothing going on, the market will tank here again. So, stay tuned to your headlines. You can't get married to any positions. This is a trader's paradise here, folks. It's not an investing market right now. It is a trading market. If you have a 10-year time horizon and you're finding a stock, that you like really good at a reasonable valuation, maybe it is. But, breaking it down, we're going to go into some individual names. We've been saying it for a while. The market, the good stocks, are really expensive still. I mean, some stocks are getting cheaper, and there's pockets of cheapness, and those stocks actually have been getting bought lately. But I mean, overall, this market is just not cheap. So you put a tariff war on a nosebleed valuation market, this is what you get. You get serious corrections very quickly. So I think if you're an investor, I think I'm just kind of sitting back and kind of watching. Maybe you're nibbling a little bit. I think if you're a trader, you're buying the dips and selling the rips and shorting the rips. I know people don't like shorting stocks. Some people think it's flat out un-American or un-Canadian or wherever you are. It's not the case. Shorting is, if you are a day trader, if you are a full-time trader and you do not short stocks, you're missing so many opportunities. My best trading years ever, 2001, 2007, 2008, 2009, and 2020. Those are my best years ever. Why? Because stocks go down a lot faster than they go up. You can make a lot of money shorting stocks once you get timing right and figure stuff out. And the hedging tactics, that all helps there too. I mean, I think there's this belief that nobody makes money on the short side, and that couldn't be farther from the truth.
I think the algos have kind of figured out the upside too, Dennis. Remember we used to always say about, the downside? Well, man, the algos they are non-biased, man. They will rip things up as as quickly as they'll take it down. But
Yeah.
you want to focus on a crowded trade, maybe CrowdStrike. Boy, oh boy,
Yeah.
trading in the red. Let's get to the actual numbers. It was a mixed quarter. They beat on the EPS by nearly 20 cents, but they missed on the sales. That guidance. Whoa. Is that really right? 64 versus to 66 versus 96? Wow. That's a haircut here, Dennis. Down in CrowdStrike, coming back to where we were back. I don't know. That was 360 area to me looks important, but we're trading below that. Let's talk CrowdStrike.
It was a bad night to report earnings. You have good nights and bad nights. When the market went out, I know you can say, what are you saying? Overall, we're up here. But when the market closed at 4 o'clock, the market really got hit hard. And then you report earnings and CrowdStrike, we can get to them all. Not pretty whatsoever, the reaction anyways. I did buy the dip because it's just been working. I bought it at 353. I flipped it out at 360 this morning. So I was able to make 7 points. Yeah, not bad. That was a good little pop-up that
Why
I had on there. I don't know where it went to. I
353?
think it was 361 or 362, so I didn't get the whole move. But
Why
pretty good. The reason
353?
I bought 353 was the little double bottom in the after hours there, Joel. So I didn't buy it the first time down there, but you see when it came to retest
Yep.
it around like 5:30, and I'm like, well, I'm going to see if that's going to hold. And it did. So, I mean, you can use levels in after hours trading as well. Make sure your charts, use after hours trading. That's why we got TradeStation here. You can look at it. You can see clearly, where we bottomed, and then we came to retest, and the retest held. And, then it moved up here again. Now we're leaking here again. And, I'm already out of the trade. So I don't know, like if you can come in and do it the third time. Sometimes the third time's tougher. Christian, you playing the CrowdStrike?
No, I looked at it yesterday, and I like what Joel said about this, is that it's too many eyes on it, and it seems like right now it's a pretty good observation there, Joel, is that the more eyes on this and like higher expectations, I didn't like the numbers. If something goes down and like the algos, as you talk about a lot, Dennis, where the algos kind of like misinterpret the data, then I'm all over it. But I was like, I don't like I don't like the guidance that they just put out, so I'll stay away. But yeah, it's interesting. Like, and then the other one that was out yesterday was Okta, and like, okay, Okta's less followed. There's not as much hype on it. And what does Okta do? Goes up and closes on the right around the highs yesterday. So it is, I think this market is about some expectations, and the expectations probably just too high for CrowdStrike. Plus the numbers, I don't know, didn't seem too good to me.
Wow.
I mean, and the AVAV numbers, we might as well move into that one here too, because it's the elephant in the room here. Yeah, I'm still long AVAV, and it's been a disaster here since November. The stock was $220. We've got now a 2-for-1 stock split, and the earnings were not here good either. I mean, sometimes it's a good idea when you stock doubles, we bought this at 120, it almost doubled to 240. Take half the money off the table, and you're forever playing with the house's money. I actually did sell some of it, but then I rebought. That was my problem. I rebought it around like 160, and now it's 111, and I'm like, wow. So growth stocks are just a no-no in 2025. AV is absolutely a growth stock, and the growth is slowing substantially here. The earnings were not good whatsoever. Earnings to 30 cents versus 63, so a miss. 167 million versus 196 million, a miss. Lowered guidance. There is nothing good in this report, folks. And then, you look at it and you think, well, growth stocks are already out of favor. So it's ugly, deservingly so. I'm getting hit on this one.
Trading on the lows of the pre-market session. I mean, we're I don't know. You want to think about $100 at this time? A nice round number. I got a number, and I'm just pulling this off a monthly. Your own discretion here. 104.67. That was your low back in October of 2023. If you don't want to miss it, maybe go out there at 105. That's another $7 away. That's just trading at the lows of the pre-market session. For AV. Wow,
buying stocks on bad earnings has been a recipe for disaster. Completely talking against my book here. I don't know if I'm going to get out of this. This is about where I bought it originally. So I'm like, holy crap, I round tripped this whole thing. Like I said, I sold some of it and then I rebought it. So I basically, gave back the majority of my gain. Disappointing. But again, it goes to show you, you hold on to some of these growth names too long. Sometimes they can turn, and they can turn quickly here. And this one in 3 months, basically just giving back, all that huge gain that took over a year to get.
ADP U.S. February private employment rises 77,000. The estimate was 140,000. If you're thinking about that little dipsy doodle that we just had at 8:15, that was the data. The data. Boom, boom, boom. We get jobs data, right? Do we get it on Friday? Do we have a job? Oh, we do. We have non-farm payrolls on Friday. We have the S&P ad on Friday. Christian, any comments here on what were we covering there? AV?
Oh, on AV. No, I'm going to pass.
This is not a Christian stock, Joel. We know Christian
okay, I'm
stock.
sorry.
The stock's going straight down. So I think, I'll just comment for you, Christian. This is not a Christian Fromhertz stock. It probably was at one time.
It was,
Christian Fromhertz is fun and it's smart enough to get out when the trend breaks. Long-term investing.
I used to hold this stock. Yeah, I used to hold it. I don't know.
Yeah, you know what? And this is why I keep saying maybe I should just become a trader 100% and like this long-term investing. Because I'll tell you, the long-term investing account in February got smacked around pretty hard. Even though I got out of most of my Tesla at a pretty good price, a lot of other stocks got smacked around. My trading account up again in February. I just keep looking and thinking, man, if we're just going to get into this market where it wants to get back years of gains in months, I don't know if investing is for me. I'm starting to think that I might just start trading everything. So I've been thinking about this for a long time, talked about it on the show for a long time. I've had core investments for a long time, but my trading is way better than my investing. It just is. And again, sometimes I get really good ones and they go up 200, 300, 400%. But then other times, and other times you get up like 100%, something like AV, and you're like, well, I'm in it for the long term. We continue to hold it. No, that's stupid. When they break trend and they start to break, it's maybe time to get out.
Oh, talking about getting out here, folks. We're headed down towards settlement, 89.75. The current low is 90.50. I don't know how they got that mark at 89.75, but they did. So that's if you're marked on your sheets. More, you talk about giving back some gains here, and I just pulled up ANF, Abercrombie and Fitch, down another $7. Let's just call it $8. They beat by a nickel. They beat on sales. Sales growth 4 to 6%. Let me see. Guidance. Boy, oh boy, that was share repurchase. Out of favor stock, Dennis. Talk to me about ANF. I know you're not buying the dip in this one. And I'm not even going to ask you about this one, Christian. So you figure out the next stock.
This is momentum broken here too. We got to find out, where Christian is finding momentum here. And again, I guess it's maybe in the consumer staples and stuff because those things have been going. But trend's broken. Trend's not your friend. Now everybody's caught in the thing. Valuation support on ANF is probably going to come in eventually here, but it really ran a long time to a point where maybe the valuation was just a little bit too extreme, and then you get the growth slowing, and it's not a good combination. Well, it's not extreme. It's 8 times earnings. These retailers. It is tough. The retail environment. Again, the odd one gets into favor, and then they go for a run for obviously a couple of years, 50 to 150 or 190. And now, you're full circling it again. Again, a case for trading and not investing.
If you have been waiting to buy this at the January 24 low of 86.91, you may get your opportunity there. I'll call that a, well, did it even trade through there? Let me see this gray bar here. It went to 86.02, so you had a shot if you were so inclined. So we'll make that minor support. And wow, what a thrashing here in ANF. And like I said, Christian, I'm not going to ask you about this one. Let's stick with the.
I'll chime in really quick. I mean, I was favoring Abercrombie and just like the AVAV, and I think it's just a good trading point here too. Once these stocks have been in uptrends for a while and they break that 50-day moving average, go back to ANF with that chart 1 second.
Sure.
Like that to me, when something is trending up, I am a trend trader. That's mainly, I do trade momentum, of course, but really by design, like I'm a trend trader. So when something breaks its 50-day moving average, to me, that trade is over. And I wait for it to retake that 50-day moving average. And if you notice on your screen there, once that started to break, really like broke the 50-day moving average, and I think that was on earnings, it's been over. And it's over, Johnny. When something's in an uptrend for a while, breaks its trend, it comes off my screen. I don't pay attention to it anymore. And that's okay, because there's so many stocks to look at. I don't need to figure them all out. If they retake, then I come back to it. So just wanted to chime in.
I want to go into this, and I don't know if you were going to go here, Joel, but before we leave this conversation, because it sounds like we're doing a trading versus investing show, it's all of a sudden turned into Jay Diamond saying long-term investors, and again, he's not saying this, he's just saying long-term investors often say that no one can time the market. Christian, I want to get your thoughts first of all on this. I've kind of chimed in a little bit on the chat here, but this is out there. You see this in social media saying you've got to be in stocks the long term. Trading is too hard. Nobody can time the market. It's time in the market, not timing the market. You hear all the sayings. I think it's all hogwash. I want to know what you think about being able to time the market, because I think you're a pretty good market timer.
Well, I think number one, I know you're trying to separate trading from investing, but if something breaks the 50-day moving average, to me, I don't want to be in it investing or in trading.
So you're a trader on everything at that point in time.
Well, no, it's not a trader. I mean, hey, if I'm in a stock and if I'm in it for 2 years, right? So investing, and it breaks its 50-day moving average, something's changing with the stock. I don't want to be in anymore. I want to be in stocks that are in uptrends. And it's the same thing for the overall market too. I mean, right now we're kind of flirting with, when we look at the averages, and I agree with you about, I don't touch my 401k, and my IRA and stuff like that.
What's in your 401k? Do you have stocks or just like ETFs?
Mainly ETFs. For IRA and so forth. I'll have, index funds. I'll have SPY, Qs. I'll have, things like that. I'll have some international exposure, and that's like long term. I'm not touching that. I'm not looking
at that. And that's
at
what
that
I'm talking about, though, is I'm talking about scrapping that and just trading it all.
Well, I mean, then I also have so that's long term. That's 401k. That is straight, sure, like investing long term. But then I also have accounts too where I'm not actively trading them, but I'm still going to monitor them and basically say, hey, what's going on here? Are things breaking down? I will basically trade, think about that as more like, not 20 or 30-year time horizon, but, like a couple of year time horizon. So I will make adjustments based on that. But
Christian, have you ever, and this is going back to something that that Dennis said. I mean, do you flip? I mean, I know we've been in a boom. I'm probably going to put like the low end of the market, but your technicals are good. When they're getting you out, I mean, do you ever buy puts on something? Do you ever short anything? Because, you're always trying to find the strength in the market. And right now, there's not a lot of strength. If your strategy is working when they're going up, have you ever implemented it like when it's going down? Something like
Well, I
ANF?
think you're
I
just
mean,
asking, is he
Yeah,
playing stocks on the short side, which he does.
it's a great question. I will generally, once we start to break trend, I gave a webinar last night and I was talking about a little bit about 2022 and about shorting that year and so forth and how that worked. And you know, it is something that I do more of, and the beginning of this the beginning of pre-market prep, Dennis made a great point about selling stocks, that are ripping and so forth. I try to take more of that approach, as because that's what's really working in this market. You have to understand what's really working, and
Mhm.
you look at where the VIX is right now. The VIX is over. When the VIX starts to shoot up, like starts to get away from 20 or 21, that means stocks are moving much faster than they normally do, and you could really make some good money. I was illustrating yesterday. I was talking about how I want to get on board with just day trading Nvidia. The swings that Nvidia is making on a day-to-day basis, and I feel like, geez, I really need to get on board with shorting it as well as going long, because
hmm,
it is moving crazy. And this is where you can really make money in terms of being a scalper, because it is right now very difficult to do my bread and butter trading, which is swing trading, right? You don't know, like, things are really moving around. There's a lot of rotations, so it's dicey. So you got to go where it's easier to make money right now. And I agree full heartedly that doing some day trading and scalping right in this environment with the VIX over 20, absolutely. Like, so I'm trying
Yeah.
to get on board with that. Again, I need a little bit more, like, I need to get back to like muscle memory of going back and shorting. But I agree, and we were talking about some tactics, about trying to basically set up trades for shorting and going long. So I 100% agree with you.
Keeping the conversation back to earnings here. So we had a number of other earnings that reported here too. This morning, let's go to Foot Locker, because this is a widely followed stock as well. We've seen Foot Locker before, and the stock is just so bloody beat up that sometimes, the bar is just sitting on the floor and they just have to walk over it. I think that might be the case here, because the stock's actually popping and the earnings actually were not that great. They're okay. 86 cents versus 72 is a beat, but the sales missed. The guidance is kind of in there, making $1.35 to $1.65. I mean, at one point in time, we were talking about Foot Locker earnings a lot higher than this, though. So, I mean, they just, they made 86 cents in 2024, just the fourth quarter. They're talking about making $1.35 to $1.65 the entire year in 2025. Again, seasonal, because fourth quarter is always the best for these retailers. But, you take a buck, go medium, and go $1.50. Foot Locker, $18. Think about like what you were paying, if you look back when it was 60. They were just making a lot more money. I mean, the trend is not your friend in the earnings here in Foot Locker, mall-based retailer. I mean, I guess they're trying to get out of the malls and do other things too, but holy mackerel, I mean, this has just been a disaster.
Yeah.
It's
This
not a
is a
Christian
tough one.
Fromhertz stock. Joel left. This is definitely not a Christian Fromhertz stock. So we'll just keep moving along. I
Let's
can
keep
just fly
going.
through. But we got to
What
find a
about
Christian Fromhertz stock. Like right
let's
now,
talk about
what
yeah.
are you looking at? I'm going to ask Christian Fromhertz. Are you finding, okay, consumer staples maybe? Are you actively trading those right now? Like, finding momentum in there and trading those from the long side? Because you like trading those Momo names. Coke, Pepsi, and those are not Momo names, but they've been acting like Momo stocks as of recently. Is that where you go and get down and dirty? Like when the Momo names are starting to all go under their 50 days and you're staying away from those? Are you just like are you finding other like tech names that just haven't sold off and are holding up well? Talk to me about like what you're actually trading right now.
Yeah, I mean, I'm trying to just basically, now that the VIX is doing what it's doing, I'm trading less. So I'm like, in terms of like holding positions. So I really scaled back the number of positions that I'm holding, right? And I will kind of look more to day trade. Um, Checkpoint Software is one name that I'm interested in because it's what the market seems to like right now. It's
Yeah.
cheap. Um, it's also low volatility. I've talked about that. No, those stocks really got hit yesterday because there was a rotation out of that low volatility trade yesterday. But in terms of investing and putting on new trades, I mean, I like BABA right now. But if you look at the international equities last night, I mean, there's some big moves that happened. For example, the Hang Seng last night was up 2.8%. Look at what the DAX is doing this morning. It's up 3.6%. So you
Yeah.
want momentum, you got it right now, but it's not in the
Yeah.
U.S. And I've talked about European financials, and I've been astounded. I haven't participated in all this stuff. I've just been kind of watching a little bit with what the European financials are doing, because it's like boggling my mind to see something to see something like HSBC act like an AI stock. I mean, here's HSBC. This is very odd to me. And, so I'm watching a little bit for dips in this stuff. I go back to this BABA chart. BABA is a liquid company, right? You could trade BABA, but I really like the consolidation here. Let's see if it jumps back above five period moving average. So I think for now, and if you listen to the news too, that's been being announced, is that China, I think last night announced, like, it sounds like another round of stimulus that they're basically enacting. So also, Germany is increasing. I think it's Germany. Sorry if I'm getting the facts a little bit hazy here, but they're announcing that they're ramping up their defense spending, right? So when you think about, like, right now the U.S. is not doing that. The U.S. is bringing back their spending. They're a little bit out of consensus. They're doing some, you could even call it a little bit of austerity measures, right? They're bringing back the spending back in line, trying to balance the budget. That's not necessarily what makes stocks go up in the short term, but you start to enact stimulus, and these are things that kind of pumps liquidity into the market.
It's a great point to look international. I want to go back to Europe here, because you're right, Christian. These are just incredible moves here. Do you think, like, the strength in Europe is maybe that we're just having the weakness here, and the US has been the best place to be for so long? And, now they're looking, people are just looking outside the box to a certain extent because of the recent weakness we've seen in US stocks. And they're like, obviously, you look to Canada, and that's, North America, and maybe that's not where they want to go, but they're going and looking at China, and they're especially looking here over at Europe, because these stocks have just been beat up for a very long time. I mean, even if you go out, longer term and look at something like the EFA, if you want, we've really gone nowhere, I mean, for a decade on European stocks. So, I mean, is there, as much as we talk about, and you got Germany up there right now, EFA encompasses a few, a little bit further than just Germany there. But, I mean, it's just been a long period of just, and I'm, go out maybe on the EFA. I think we're still showing Christian's charts here.
Oh, yeah,
I just want to make my point here. We're $72 in 2018. I mean, we're 7 years later here, and we're not far from all-time highs, but really, when you think about the moves that we've had here, in U.S. stocks from 2018, this has been a huge laggard as well. So is it just a catch-up trade across the world right now, and maybe this has legs?
Well, we had a great guest on yesterday. Cameron mentioned yesterday that how out of favor international has been. I think it's like 15 or 16 years where the U.S. has outperformed. So yeah, I do think it's a little bit of a catch-up trade, but also take a look at what stocks are in some of the, go through a little bit of the research and figure, like, the stocks that are in these ETFs. So for example, EWG, which is the Germany ETF. If you look at the top holdings, tell me what you think some of these stocks are. Siemens, Alliance, Deutsche Telekom. Are these growth stocks or are these value stocks? BASF, which is a chemical company. You got Adidas in there too. You got Deutsche Bank. So is
value.
These are value, and that's the same thing to some extent, right? Here's the VTV ETF. Now, again, it broke down pretty decent. It underperformed pretty decently yesterday. It was down 2%.
Profit taking, yeah.
Yeah, there's some profit taking going on, but I think that this, and value has outperformed growth in the U.S. So if there's more value stocks in some of these European names, it kind of makes sense. Like, it's not high growth. It's not mostly AI stocks that are in Europe. It's insurance companies. It's banks. There's some software companies in there too. SAP is a name that I have no position in it, but I'm watching. I want to see if it turns back up here a little bit. So, that's kind of where my head is at. And yeah, I think it makes sense to increase, if you haven't, because, and I get it, international has been so dormant that, so anyway, I think it makes sense to have some exposure to Europe and to China at this point.
Is it the question with the European strength too? And we're going to go to our guest here just 30 seconds, but I just want to bring it up. Is it, like we haven't heard Trump say much about tariffs over there either with European. And the trade obviously isn't like it's like Canada, US, it's right there. Do you think this is a little bit of a safety trade to Europe here as well? Because we're not hearing anything really from Trump on Europe. Like, I mean, he's mentioned it, but we haven't had any imminent tariffs coming over from Europe.
Well, and plus, like, and I have to do my homework here, and I think that's important to
Yeah.
realize too. But how much are they importing from the U.S.? Is Europe really importing a lot from the U.S.? I don't believe so. I think they
Not as
get
much.
most of their stuff from probably China. We've been hearing about how they get energy from Russia. So what? How much do they get from the U.S.? Probably not much. I don't know, like maybe some whiskey. I don't. some
Yeah,
Jack
so they're
Daniels.
insulated from all this Trump tariff stuff to a certain extent as well, maybe.
Yeah. And Tesla, which we know is going, okay, so they're not purchasing as many Teslas. So they're already doing some diversifying in their own, in their own strategy. So, yeah.
All right, let's bring things back to our homeland. We got our guest at 8:35 here. Let's bring Jay McCanless on from Wedbush Securities. Jay McCanless, managing director over there at Wedbush Security, covering the housing industry and home builders. Whew, wow. I've been interviewing you for a couple of years. I know you've had some bullish inclinations, and I know you've gotten a little bit cautious at times too. Boy, oh boy, we're in a tough environment now. Jay, how you doing today?
Doing well. How are you guys?
Good, good. So, before we get to the the individual issues that you cover, and I did see mortgage demand up nicely this morning with the little bit of lower rates here. Is that what you're looking at? Is that going to kickstart the housing industry, or what are the other macro factors you're looking at?
Yeah, I think it's all a rate trade right now. You can't really overthink it. I think coming into this year, we were out of consensus thinking that rates might come down a little bit. So far, that's been the right call. It wouldn't shock me if they continue to kind of drift lower, especially if we see in the spread that we watch on this group is the spread between the 30-year mortgage rate and the 10-year Treasury. That spread has come in a little bit. It's about 100 basis points over its normal 160 basis point spread. If we could see any tightening there, that would help with affordability and bringing rates down too. So, yeah, I mean, the other thing we're watching for, and we don't forecast the job numbers, but when is all this noise out of DC, et cetera, is that going to have an impact on the jobs report, whether ADP or the NFP one? So that's another thing we're kind of keeping our eye on. But yeah, at this point, it's about rates because the builders have houses ready to sell. They just need to figure out affordability for their buyers.
And let's just go regional. Are they ever going to be able to rebuild those houses in California? I mean, the replacement costs, the insurance costs, where's the money going to come? Higher construction costs. I mean, whew. I mean, I don't know. We'll get to your individual issues, but are you looking at anything on a regional basis and saying, hey, no touch here?
So I don't think my builders are probably going to participate in the rebuild there. But if you look at some of the manufactured housing names that we cover, Cavco and Skyline, the tickers are SKY and CVCO. In the past, Hurricane Katrina, Hurricane Harvey, some other events like that, these companies have been asked by FEMA, paid by FEMA to produce some temporary housing, and maybe that's an angle. But so far, surprisingly enough, we haven't seen any requests from FEMA either to help with the California wildfires or with the homes that were destroyed in the hurricane during the summer. Western North Carolina, Eastern Tennessee, we haven't seen FEMA try to get active on either one of those. But I think specifically to California, you called it out, Joel. That's a lot of regulation. And quite frankly, it's not enough houses, I think, in most cases for my builders to really help out and deal with. But again, the manufactured housing names, they might be able to help some of the problems there. And our hearts go out to all those people that have been affected.
Okay, well, you got some outperform ratings here. And let's start with Beazer Homes.
Yep. So Beazer is a microcap name that's trading about 50% of my fiscal 25 book value number. The group's trading right now at about 110%. I think if you are a patient small cap investor, this is a name to look at because they're making their homes more energy efficient. They've really moved the entire company in that direction. One of my few builders to actually do that. So I feel like this is a name that very patient investors can take a look at. I'll tell you, we published a note this morning on another microcap that we cover. Landsea, LSEA is the ticker. We've seen an activist, a company called Mill Road, that owns about 6% of the company. They've filed to put some directors on Landsea's board. So I'm thinking interest level in these microcap home builders may pick up just based on what we saw out of Mill Road and Landsea last night.
Landsea, do they build homes in the ocean?
No, they have their core markets are Texas, really Dallas, Central Florida, and then they actually do a lot of building in Northern California. So smaller builder, kind of focused on entry level. Had been trying to go head to head with Horton and some of the bigger names in terms of what they produced, but now they decided to go a little more upmarket with their homes. So I think it's another name that's worth a look.
Okay, let's go to another one. Now these all have outperform ratings. M/I Homes. Boy, all these charts look the same here. Give us the reason for your outperform rating on M/I Homes.
So the other thing that we've had is kind of our core thought for the year is that move up housing and builders that focus on move up. Those are the names to look at because typically their average buyer is less payment sensitive than the entry level buyer. So a name like MI Homes that has 50% entry level, 50% move up, but we think has some good dirt, not only in Florida and Texas like everyone else, but they also serve the Midwest and some areas like Indianapolis up into Michigan, et cetera, and cover some geographies that some of my other builders don't. So we like that one. Again, cheap on valuation, but I think also when we get some rate help, they will have demand hopefully improving from both entry level as well as move up buyers.
All right, let's go to some of the big boys here. Pulte, boy, are all these charts looking the same? Pulte, Homes, and Toll Brothers.
Yep. So Pulte and Toll, and especially Toll with their focus on luxury housing, that buyer has held in very well. And both these companies do active adult, which is 55 plus housing. We like both those areas right now because typically those buyers, they're not completely rate insensitive, but they're much less rate sensitive than your average entry level buyer. I think also both these names are a little more expensive from a valuation perspective than my group, but Pulte and Toll have both been pretty active on their buybacks. And their Pulte, at least so far this year, has outperformed the Russell. It's outperformed the ITB. So getting a little bit of alpha there, but Toll Brothers, after their earnings report a couple of weeks ago, they're kind of coming back after that. But the story here is pretty simple. We like customers and home buyers who are not nearly as rate sensitive as some other folks are. So for large cap investors, these are the two we'd focus on.
Hey, Jay, great to have you on the show, and really enjoying your perspective on this group, because as we're kind of going through these charts and so forth, the group is just out of favor right now. But I specifically really want to just continue to monitor these names, and kind of wait for them to, stop going down a little bit and start to move back. Do you think the major catalyst will be interest rates? And if you do, what is it, the 10-year that you mainly are watching, or is it the 30-year? Is there a specific rate duration that you're watching, and where do you think these things have to get back to for the housing market, not just the stocks in general, but for buyers? I'm hearing a little bit about how just the real estate market is a bit stagnant. Where do you think we need to get to for the I'd say the velocity in transactions to return?
So if you look at 30-year mortgage rates is what we monitor most closely to answer your question. At worst in October of 23, we got up to almost, I think, 8.25. As of last night, we're sitting at 6.75. So we've seen a decent amount of improvement there. Would love to see it keep drifting towards a 6 handle and even a high 5 handle, because when you ask the builders what interest rate can most people buy a home, the consistent answer still is 5.5 to 5.75 on the 30-year mortgage rate. That's the real sweet spot. And so if you look at where the builders are buying down mortgage rates for people to be able to afford the homes, it's down into that 5.5, 5.75 level. So if we got the market to move there on its own, that's going to help the builders' gross margin rise, as well as potentially improve profitability for the group. So that's the main interest rate we're watching. And I would say yes, getting the rate move will help. And again, like I was saying before, if you don't have a job, you can't buy a home. So that's why we're paying very close attention to what happens with the jobs numbers. I think at this point, we're going to see some tariff impact. We saw the materials names that we covered yesterday, which are all focused on lumber. They all sold off pretty hard when the tariffs were announced. My take on the tariffs is if it's a 2-week thing, 3-week thing, no big deal. But if this does extend into a multi-month move, near term, it's not going to be negative for the builders, but longer term, especially as they're having to deliver houses in the back half of this year, front half of 26, the cost of their lumber packs is going to go up.
Gotcha. Thank you very much. Appreciate that. Just last question that I have, and I didn't see these two names on your coverage list, but I'm going to ask you anyway. Invitation Homes, INVH, and American Homes. I've just been noticing a little bit of strength in these names. These are two, like, to your point about like economic sensitivity and about jobs and so forth. These are two companies that are they do like more like rent for, they're renting new homes. Even though you don't cover, I don't believe that you cover these
No.
names, but do you think that this is the theme, or a little bit of a short-term theme taking place right now in the home builders?
So I'll get to those two in a second. But if you look at a name like Zillow that we do cover, one of their highest growth from a revenue growth perspective, one of their highest growth areas right now is rentals. And I think they are taking advantage of this affordability trend. They just set up a new marketing agreement with Redfin to basically be the multifamily listing provider on Redfin's site. They signed a similar deal last year with Realtor.com. And I think until we see some mortgage rate improvement, that is a good theme. I think you're on the right track with that theme. I know AMH and Invitation well. I don't cover them, as you said, but I think they're also playing the same thing probably with a little older customer than what the multifamily apartment operators are doing. Because when people come to buy homes from my builders, the first thing they ask is how good are the schools, and that's a thing that I know AMH and Invitation have both focused on, as being in the right school district, or the right school district, or fairly closely adjacent to it. And that's, I think, helped them and made it an affordable opportunity for people to get into homes. So yeah, until we see some rate help, I think, and you could even buy a name like a DR Horton or a Lennar that are both doing some of the same thing, rentals and single family rentals. Anything that helps with affordability is something we like right now. Our best way of playing off what we cover is going to be either Zillow or DR Horton. But again, I think AMH and Invitation are great names, just not ones we cover, have a real official opinion on.
Just a technical note on an AMH, man, you got to knock out that 3770 seller, and then boom, that was also resistance back at the beginning of the year. That's a huge level. We'll make that a 5-star. Let's just go off the builders here. Go to the second. You did mention the Zillow Group. Way off its all-time high. Let's talk Zillow Group, right? Selling the homes and then need to build them. BLDR. Let's touch on those stocks before we wrap it up today.
Sure. So, if you look at Zillow's core real estate business, and they said it in their call, and we actually did a call with management a couple of days ago. the core real estate business is still kind of flattish. Buyers, and especially more importantly for Zillow, realtors aren't willing to spend a lot of marketing dollars right now until they see some help on rates. But at the same time, I think, again, Zillow is growing through their rentals business. They've vastly improved their mortgage operation. And then what we think kind of the hidden gem that no one talks about with Zillow is that they have a lot of different software packages they've bought over the last 10 years. They're not breaking out the revenue and the profit from the software yet. But we think that's the reason they've been able to outgrow the market the last few quarters, and expect that to continue as realtors and larger brokerages have to find more ways to use technology instead of hiring people to keep their costs down. So we like multiple layers to this story, but especially the software layer. And then on Builders FirstSource, Builders FirstSource is the largest building materials company in the country. They have about 12% market share. It's the largest market share of any materials company in the country. They primarily, about 75% of their revenues come from single family starts. So again, if we get some help on rates, or if they continue to do tuck-in acquisitions like they've been doing for 6-7 years now, they're going to keep growing that market share. And it's certainly well off its highs, and a name. So a more volatile name, I would say it's kind of not higher risk, but higher volatility for sure. But it's a name that we like a lot, especially as we think they're going to keep growing that market share.
Jay McCanless, Senior Vice President of Equity Research, covering the home builders and building products sector for Wedbush Securities, joining us on PreMarket Prep. Thanks a lot, Jay.
Thank you.
Interesting take on the housing market. Thank you. Okay, we're back. We're bouncing around like a ping pong ball here. We did go red. And I said, can the bulls make a stand? And for me, it's that closing price at 89.75. Christian, what's your key? What's your key for today's trading?
For today's trading, it is a tough market, and I think going back to the conversation that we had prior to the guest, like, have a couple names that you could day trade in this market, because again, the VIX, right? I'm in order for me to go back to swing trading a little bit more, I got to see the VIX go back under 20, right? And start to settle down. It's just too much volatility to do much. And by the way, like, there's nothing wrong with that. There's nothing wrong with increasing your cash position during these times and going to where there's opportunity on the tape. So I'm wearing my day trading hat right now with the VIX.
The best hat to wear right now.
Yeah, exactly.
The investing hat's not going so well. The day trading hat is going very well. So continue to do that. Just some other, we're going to go ticker time here in 2 minutes. I just wanted to say Tesla sales numbers from Europe came out again for February, and they are, I'd say, almost worse than January. So down 44% year over year in the region. Talking to specific countries, Austria down 61%. These are not like January to February and seasonality. These are year over year numbers. So comparing February from last year to February to this year, Austria down 61%, Belgium down 50%. Denmark down 48%, Finland down 56%, France down 44%, Ireland was up 31%, and UK was up 11%. But across the region overall, down 44%. I mean, this, we can say, this international competition, obviously, Tesla, over in Europe, because they've got a lot of other, China EVs and other EVs over there. But I do believe a lot of this is what we've been talking about, is people are pissed off at Musk. And there is this, sentiment outside the U.S. and maybe some even inside the U.S. that I'm not going to buy a Tesla because I don't want to support Musk. I think people are voting with their dollars here. This is a serious, serious problem. Getting multiple, questions from the chat earlier. Even though the sales are down, is Tesla still good for the long term? I don't know. I've never seen a CEO actively, so political before. So I'm not sure what this means. Like, I can't think. And if you have examples, chat, give me examples, please. But when you get, a CEO just one-sided, it's pissing off so many other people that, I'm scared that I don't know if it's okay. I still have a very small piece in long-term portfolio. I've sold over 90% of the position here. Obviously started selling at 420, 380, 350, been selling, all the way in. And, it was great, because we were, my average cost basis was 190. But I mean, at this point in time, people are saying you're going to rebuy those shares. I've got to see these sales numbers start to turn, start to get better. And again, I'm really scared, of what we're going to see from them next quarter. Now, again, that's a long ways away. It's 2 months off. But I mean, short term here, Tesla sales are not doing well internationally.
All right, ticker time at 8:55. What do we have? I saw Brett's going to put them in here. I saw Oracle, and I haven't looked at Oracle lately. I mean,
it's back down here. I mean, I'd like to own Oracle. I think it's a good stock long term. Valuation just, got away from it again, because this was a stock that's historically traded around 14, 15, 16 times earnings. Got up to like over 28, 29, 30 times earnings when it was up to 180. It's back down to 22. But I mean, you get back down to historical, and if we're really going to continue to be in an ugly market here, is there a outside possibility it could get down to 130 again? It's possible. So I think guilty until proven innocent here for me for Oracle. I do see all those lows in this area, Joel.
Yeah,
so I mean, if you want to take a shot, you can. But if it absolutely starts cutting through 150, I'd say you'd have to say you're wrong.
Yeah, I think I'd even play it a little bit tighter to the vest than that. I mean, this 153 to me. I mean, I know you want to give it some room, but boy, oh boy, you have the gap up low 153.12. Undercut it a little bit here, 152.42. Undercut it here. I'm repeating myself, 152.66. Yesterday's low. 153.5. There's no such thing as a quad bottom. So maybe a whoop up on this thing if it goes through, try the long side, but don't, if it goes through there with some mo, maybe you get a gap fill here. I know, Dennis, you're talking way down at 130, but there's still a juicy gap in here. And the top of that gap comes in at, where is that? 144. If you want a gap fill, or actually 143.30 if you're looking for a gap fill there.
Tickers, let's go NUE. I want to ask Christian about this one here, Nucor. It's a stock that should benefit from tariffs here, yet it's giving back a lot of the tariff gains here. It's also a value name. NUE, just give you the fundamentals here, is trading with a P of only 18. Thoughts here, Christian? Is this one you'd nibble in, or is this just too broken for you too?
Too broken for me. One name that I am looking at in this group is CRS. This is Carpenter Technology Corporation. Yep. That's showing relative strength.
Wow.
So it's holding better than the group. So I'll always gravitate towards names that are doing pretty well in a tough group. So CRS is a name that's, if I'm going to trade it, I don't have any position on in my trading account. I do have a position in my long-term account, but I don't have anything short-term. But this is one in the material space that I'm watching.
Where should we go here? Man, a lot of interesting stocks. Mickey D's?
Yeah, tickers, get them out there. There's a bunch of them in there. We're just cherry picking a few here.
Yeah, just real. I see just major. It's held up well, but we know it's what category that's in here. Held up well. I mean, I like to see it get over 315. That's just hanging in there, though. Mickey D's value stock.
How about
coming at us now?
How about SE? I'm going to use one while we're looking at other tickers from the chat. How about SE? I've talked about international stocks. This one reported earnings. I'm looking for this stock to. I did get long. Again, this is like starter positions stuff for me right now in this market. But I like SE, and I'm targeting 144 in SE. Again, it's international. It's not China. I think this is what SE is. Singapore. Yeah. So go ahead. Sorry, guys.
International stocks are doing well. A lot of them here. It's trends your friend here. This is the Christian Fromhertz type of stock because it's been trending higher here and looks like it's consolidating to go higher here too. So I'm kind of with you here, Christian. I like the international theme right now.
All right. MongoDB. Do we have that reporting soon?
Mongo. Yeah. Good call, Joel. Reports. I think reports tonight. MongoDB reports tonight. So that's, always tough to do technicals on a stock. But what we'll say is it's going to matter what kind of day we're having. Like right now, we're flat. So if we close strong today for whatever reason, then MongoDB reports into a good tape. If we close weak, it reports into a bad tape. It matters, folks. So that's how simple it is. Where are we at the end of the day on the S&P? That matters when you're reporting, because it's a wishy-washy. If it's a beat raise, usually they'll pop. But if it's a beat, or if it's a miss, usually they drop. But if it's like, they don't know which way they want to go, they'll look to the market. So keep that in mind. If you're trading MDB tonight, where the S&P goes out is going to matter.
I see a bunch of lows at 240, and even though there's one spike high at 280, I'd be looking at those levels here. We are continuing to leak here, folks. We are now in the red after being in the green much of the pre-market session. IWM clinging to a 14-cent gain. Triple Q's holding on to a gain here as well. Dennis, I know people like to hear about the imbalances, and
yeah, I can
maybe
give you those too. I was just blind shorting last night. I didn't think there was going to be a deal. I didn't think Trump was going to mention a deal. I think the market popped up after hours hoping there was going to be some type of mention of a deal in the Trump speech. Didn't happen. So I shorted IWM. I shorted SPY, shorted stocks last night. I just covered them all in. So, I mean, this is, just playing headlines, to a certain extent, but also just selling rips. I mean, it's just been working. Like I said yesterday, selling the rips been working better than buy the dip ever did. So blind squirrel selling rips wins again. Imbalance land, mostly to the sell side again, unfortunately. They're mixed. No, I wouldn't say that. They're mixed. Some of the consumer staples are showing sell imbalances, which is interesting. Coke, 94,000 to sell. Procter Gamble 34,000 to sell. Walmart 61,000 to sell. Cherry picking a few there. AT&T, it stands out like a sore thumb, 154,000 to sell. Merck also 71,000 to sell. So you're seeing a little bit of sell imbalances. If the market remains weak, I may try to actually buy those stocks, because often the consumer staples pop in weak markets. So if you get consumer staple opening too low in a weak tape, sometimes that's a good quick trade where you buy and then you flip it out a few minutes later. Christian, final thoughts?
Final thoughts. Watch the VIX. And have a couple names that you're looking for, both from the long side and the short side. Again, I'm kind of saying the same thing over and over, but like I'm watching Nvidia. I think that's a great opportunity. The way that stock is moving, you don't even need to go to the leverage stuff. I know that there's like leverage names tracking those things, but I'm going to be a day trader in Nvidia.
Okay. All right. We're going to wrap things up for today. Jim Tassoni will be on tomorrow, and talked to Jim yesterday, and his value stocks, he's been in the value. He's been over the overseas market. So we'll get an update from him on what he's looking at, folks. Let's hold yesterday's low. I know that's 40 handles away, but we got a shot at anything today. And if for your individual stocks that are still trading in the green, well, make sure they hold that closing price. Wrapping it up on this Wacky Wednesday pre-market